Welcome to Fast Track, brought to you by Aera, the podcast where we help you get into your first home faster. I'm Chereè, and today we've got a very special guest in our studio, Aaron the Mortgage Man, as most people would know you by. You've built up a pretty big profile online, the Mortgage Man. You know, people have generally heard of you, follow you on Instagram or TikTok. Do you want to start off by telling our listeners a little bit about like what exactly you do?
Yeah, well, first, thank you for having me. I guess it kind of says it in the name, right? I do the mortgages.
Does the mortgages,
I'm the
yeah.
man that does the mortgages.
Yeah.
But I guess it kind of breaks down to a bit more than that, like especially because my client base of first home buyers is it's all about helping them not only get the approval to buy a house, but teaching them how to buy a house, which I think is quite challenging for a lot of people because they've never done it before. It's kind of the same as what you guys do. I kind of break it down into 3 phases. Get the pre-approval, get the house, and then learn how to pay off the house as quickly as possible.
And a lot of your stuff, especially the content that you put out online, is quite educational based, which I can imagine is probably why your profile, you know, really took off, particularly on TikTok as well, because the information you give out is very timely. It's a lot to do with what's happening right now, and really broken down easily for people to understand. Is that what you try to focus on the most?
Yeah, I think it's value driven. Like obviously you can reference like Gary Vee and all the people that you learn stuff from, and it's like if you give away value and people learn, then if they do decide to work with you, they've already got a head start, which obviously makes my life easier because I don't have to explain like those concepts. But yeah, it is just value. And at the beginning, it's quite a funny story, is I obviously didn't think TikTok was a place where I could get clients from because like the general vibe was it's only for kids and only for people that are dancing. And I remember first off, I had a different business and Gary Vee was like, go post on TikTok. And I was like, this platform sucks. And that was probably like 8 years ago. So if I kept going, I probably would have more followers. But back to the Mortgage Man, I posted something about a mortgage. I think it was like my first video, got 1 client and she was like the perfect client. And I was like, that's proof of concept. And from that day, 3 videos a day, pretty much every single day until today.
Yeah, so that was the very beginning for you. That's how you got onto doing these clips online. And that's really interesting. I mean, it's great that you said that it obviously translated into actual clients and people, which is, I guess, where the value lies in it, when a lot of people never, I guess, thought about how social media can really impact that space. And you can kind of reach lots of different people, right?
Yeah, it's like I think of the old school advertising ways of like a TV ad or a billboard. And I'm like, what a waste of money, because you can't target people like you can now on social media. It's like if I run an ad, I can target people by saying first home buyers, and people that are first home buyers will see it. And yeah, it's about creating that, I guess, place that people can learn. And then eventually, hopefully, they work with me. Obviously, I get a little bit annoyed every time someone sends me a message and they're like, hey, I watched all your stuff and I just bought my first home, and I'm thinking, why didn't you use me as your broker? And they're like, oh, because of X, Y, and Z. And I'm like, cool, it's great that you bought a house. But I'm like, next time, use me.
Yeah. What's one thing that surprised you the most about, particularly from like building your profile online?
That there's still people that will post rude comments. I guess maybe that's not that surprising.
Internet trolls.
Yeah. I guess at the beginning, it was actually having my perfect client on that platform, on TikTok especially. Like I knew that there would be those types of people on Instagram and Facebook. And now I don't even really post on Facebook because there's too many non-qualified people. It's just more random people. I think maybe the crossover between TikTok and Instagram was way harder than I thought. Like I thought, I've got 80,000 followers on TikTok. Surely you're going to get close to that number on Instagram. But Instagram is growing way slower. And it literally took me, I think, 60,000 TikTok followers before I even got past 1,000 on Instagram. And it was literally the same videos that were being reposted. And then one kind of took off, and then now it's, 25 or something thousand on there. So, I guess that part, I suppose.
Yeah, like learning that whole new world of digital, I guess. When we move now into kind of looking at where things are at in the market, you're obviously, you sort of on the ground as well, and I guess sort of what you are putting out there in terms of information on social too. How would you kind of rate where we're at currently from your perspective?
in terms of like the opportunities to be a
Yeah.
purchaser, or
Yeah, I think if we start from like the first home buyer perspective, I mean, we talk a lot about how now's a really great time to buy with the market and interest rates having come down too. From your experience, do you feel like there is a lot more confidence for first home buyers? Are you feeling that currently?
Yes, but they don't really listen to me because they think I'm biased, right? They're like, oh, of course a mortgage broker's saying it's a good time to buy. But like if you actually do compare it to say 3 or 4 years ago, interest rates were 2.29%, you think, oh, that's a better time to buy. House prices were way more expensive. And if you did buy then, obviously looking in hindsight, you'd probably be in a bit of a pickle at the moment because your house price has probably dropped, your interest rate has probably gone up. So in comparison to that time, now is great. In comparison to 10 or 20 years ago, that was obviously better. But I think this is definitely a buyer's market, first home buyers, not because of the house prices and all that, because you know that's going to always change, but it's about the opportunities because you don't have as much competition. Like I had first home buyers that were buying in 2021, 2022, or trying to buy, and they would miss out all the time because they weren't proactive enough, they weren't aggressive enough, they just got outbid, they just got out offered by people, either first home buyers that had more money or more experience, or just richer people. Now they have less people to compete with, so they can make offers with 15 working days for finance and take their time to take 3 days just to write down the price they want to pay, which I think for a first home buyer gives so much more confidence that they're actually doing the right thing, because it's scary, right, to buy your first home. The scariest part that people tell me is how do I write an offer? And I'm like, yes, like, you know, you actually do need to sign with the help of a lawyer. And they're like, okay, I need to think about it. They didn't have that luxury. Like, I don't think they would have had as much time ever since I've been doing this. So that is a really good angle or point of view, I suppose, of you've got time to think about it. You've got multiple houses that you could look at and probably buy any one of them. So take your time and realize that, yes, house prices are down, interest rates are going down, but you've also got time. And that is, I think, more important than those other 2 points.
Yeah, that's a really awesome perspective to bring, because I think often when we talk about the housing market, and as you said, like as a broker, you're always going to say it's a good time and stuff like that. But we always look at things like affordability, which we've seen another report this week come out that said that affordability is better than ever. And you've obviously got interest rates going down. Everyone looks at the OCR and all these kind of key things. But as you said, what makes maybe this particular point in time so unique is that luxury of time, obviously oversupply in the market too, and there's lots of options and there's not as, I guess, much competition as you say. So I think that's probably something that's often missed when we look at confidence for first home buyers. And is that something that, I guess, when you're having these initial conversations with people, when you're trying to be like, this is a good time, is that something you're really focusing on, is that you can have confidence because there's no like rush to sign anything straight away?
Yeah, I try and tell them that, but everybody has their own kind of clock or thought process in their head, like, oh, I've got 15% deposit, I want to wait till I've got 20%. And I'm like, have you considered what could happen in that time while you're saving? Like house prices might go up, there might be more competition. And that's kind of like, everybody has their own mindset coming into the idea of buying their own home. And it's my job to kind of give them the pros and cons, I suppose, of if they wait or if they do this or if they do this, and make a more informed decision. Because it's one of those sayings where people don't know what they don't know. And if you enlighten them, they might be like, so you're saying I would still get a cheaper interest rate, maybe just after I've got 20% equity. I'm like, yeah, so you could lock in your mortgage today, and then yes, it will be at a higher interest rate until you have 20% equity. But then once you do, you've locked in a lower mortgage rate and the equity is now yours instead of you having to pay more. So yeah, and some people don't realize that, and it is almost like convincing them in a way, but others are like, no, I'll just wait. And I'm like, cool, you do your thing. And yeah, they've got to be ready as well.
As someone who works with, you know, all buyers, not just first home buyers like we do at Aera, I guess, do you find first home buyers sometimes the most frustrating or difficult to deal with?
Yes.
So many questions.
Yeah,
and, you know, like,
yeah, but there's certain first home buyers that are like, that don't have any questions. And then there are others that have heaps of questions. And I don't know I guess it's a personality thing. Some people feel like they like are really scared and don't know what to do. Others just have complete confidence in me and they're like, I'll just do what you say. So it does, yeah, it would be great if I could like figure out how to categorize them and be like, these are the ones that like to target. But yeah, there are definitely ones that are super scared and over the top in terms of like, you don't like relax, don't worry, or like people that are asking me questions on the first call about how to structure a mortgage. And I'm like, you don't need to worry about that because you haven't found a house yet. You don't even have a mortgage. So like, we'll park that, focus on getting you a mortgage. And then once you find a house, then we can talk about that side of things. So it's kind of like the personality, people want to know everything, but they don't need to, not yet. You know, there's a time and a place.
What do you find is often the biggest hurdle for first home buyers?
It's a good question.
Comparatively,
yeah,
you know,
I mean,
to like an investor or someone.
Compared to an investor, I guess it is the education around doing the things. And, you know, I have built something called the First Home Buyer Academy, which is like a free resource on my Linktree on my Instagram where they can just learn everything. But it's whether or not they actually, you know, learn stuff or just book a call. I think, yeah, the biggest barrier is just knowing what to do. Because people can have money. Like it's quite interesting. Sometimes they have first home buyers that have lots of money and can easily buy but don't want to because they're too nervous or they're too worried about the market or how expensive a mortgage is. And then there's others that can't afford to get a mortgage but they really want to buy. And it's like, can we like mix these two people together? And
the hybrid there.
Yeah. So it's, yeah, I think it comes down to knowing this like education and knowing whether they can buy and how to actually do it.
Yeah. You mentioned the banks before. We talked about interest rates. When it comes to the banks, from your perspective, what are they doing at the moment and how are they treating and viewing first home buyers?
Yeah. So the banks always change their rules, especially for people that have got less than 20% deposit. So the idea of you getting a pre-approval, which is what most people work towards, if you've got less than a 20% deposit, sometimes that's not possible. It's usually not possible at any bank that you don't bank with. And sometimes it's not even possible at the bank you do bank with, unless you're buying a new build because those properties are exempt from most of those rules. So, for example, if you bank with a certain bank, you might have to find a house first before we can submit your application to the bank, and then they'll give you an approval once you've found a house, as opposed to the traditional I'm getting a pre-approval kind of route. But the frustrating thing is that those rules change every couple of weeks. Like one bank just opened up that revenue of, yes, we'll do pre-approvals for our own clients when they've got less than 20% deposit. Other banks are like, nah, we're not going to do it. So
and that's challenging if you're finding a house first and you might miss out, and then I guess that kind of creates a few challenges in itself.
It's a chicken and the egg situation. And I say to people on the phone, I'm like, I know this doesn't make sense, but you need to go make an offer on a house with a finance clause. I can teach you how to do that before we submit your application. They'll be like, what? I need to know how much I can afford. And I'm like, here's the number that we can get on that bank's calculator. So we're like 99% confident that you can do it. But that's why the finance clause is there just in case they don't agree. But it is very much like, this is the first time I'm doing things and you're telling me that I have to make an offer without actually having it approved. And I'm like, yes, I'm sorry, but that's just how the bank works at the moment.
It must be challenging for you to keep up with the rules too, because you're out there giving advice, so you need to be across what's going on.
Yeah, we have a file.
Yeah.
Every week the bank sends us like the current interest rates, the policy, any changes, and we just have a spreadsheet, a file that updates it. But sometimes we're like, hold on, can we submit this now? Because it is a bit frustrating when there's 5 or 6 main banks and they change the rules every single week.
Yeah. Why do they do that? Just because they change their mind, or?
I mean, I know the real reason. The real reason is that they have a certain allowance that they can give of, over 80 or less than 20% deposit holders, and they kind of have to keep kind of like turning on that tap and turning it off if they've got too much per month. But from our side and from a first home buyer side, it's kind of like, can I just get pre-approval?
Yeah. There's a number of banks that really promote themselves as being for the first home buyer and having really good, interest rates, or kind of, I guess, sort of selling this idea that they're the best place for a first home buyer and they're going to help you the most. How do you sort of view that relationship with the banks from when you're going through with clients and stuff? Do you think that that's sort of a bit of a facade in a sense, or like are the banks ever really going to be good to you?
I mean, they are a business.
Yeah.
And they also have a commercial contract with me, so I can't say bad things about them. But they're like most of the time they are there to help as long as you meet their criteria. And that's the thing is like sometimes people don't meet their criteria but think that they should, and then they tell us this whole life story of how they've got 3 jobs. Like the bank doesn't care. They care if the numbers work. And that's ultimately how they're checking whether or not you can apply for a mortgage. And it's the same with like if you've got less than 20% deposit, you need a registered valuation. Like, why do I need that? It's like because in the bank's rules, you are a risky borrower, so they need to make sure that whatever you're paying for that property is worth what you're paying for it.
Mm-hmm.
So
it's a numbers game.
I love the banks because they pay me,
Mm-hmm.
but
yeah.
They can be a little bit frustrating when the rules do change all the time, and it's very hard to make sure you keep track of everything.
Mm-hmm. I'm sure you've had a lot of situations that have gone differently to what you might have expected when it comes to working with a first home buyer, trying to get a mortgage. Is there any sort of funny or strange scenarios that come to mind, or some of the weirder kind of situations you found yourself in?
Well, we get to look at people's bank statements.
Yeah.
So sometimes there's some weird things on there.
What's one of the weirdest?
I said this on another podcast. It was actually OnlyFans.
I was going to say, I feel like that's the route this question is going to go into.
But this person was a creator, not a subscriber.
Ah.
And the bank declined their mortgage because they didn't think that they could maintain that level of income for 30 years. So their thinking was that they're not going to have as many clients when they get older or something. And I was like, but it works if they have a minimum wage job once they pay off this. And they're like, no, we're not going to do it. So
oh, wow.
that was a while ago. That was probably 4 years ago. So maybe banks are a little bit more.
It's interesting though. Yeah.
So that was
how they look at it.
Yeah. Other ones is like things around tax and working for families credits. Like sometimes people, I think, say they don't have a partner so they can get working for family credits at a high level, and then when we put a joint application in, we're like, hold on. And it's not for us to say that they shouldn't be doing that. That's not our revenue, but like the bank picks up on it and they're like, are they actually eligible for this amount if they've got a partner? Because we've seen others where they're not. And then the same with like financials, where people claim certain things on their financials where I know as a business owner you can't claim that, but they're like, oh yeah, we can. And I'm like, not my problem, but I don't think you can.
So what you're saying is people are sneaky.
Yes, people are sneaky.
Yeah.
And they try, and I think they try and put their best foot forward, but they don't understand the bank's rules. And they're like, what do you mean I can't afford it? I did the numbers myself. And I'm like, but you didn't do it on a test rate, and you didn't do it with 1,000 per month buffer, and you didn't do it with this. And that's why the bank isn't going to approve your mortgage. Or they're like, I pay $1,000 a week in rent and my mortgage is going to be $1,000. I'm like, yeah, but renting is very different to owning a property.
So it must get you in some interesting conversations then, as you say as well, with maybe looking at people trying to be a bit sneaky too, and like how you kind of work around that and go,
yeah,
can't do this, guys. Or
but like for the tax point of view, like I'm not an accountant, I'm not the IRD. Like I will maybe say it casually, but I'm not going to tell them what they can and can't do. Like my job is to be the person that translates bank speak to their speak so they understand why they're not getting approved or why they are getting approved. I think those interesting conversations aren't really that interesting because I'm just like, this is fact, and they might get upset about it, but like,
you can't do anything about it, right?
Yeah, like
it's the way it is.
Like this is your application, this is your situation, like, and this is the bank. Like if you don't meet their rules, then you need to change your situation. And as harsh as that is, that's just what it is.
What are the most common or funny things you've got to tell people to reduce their spending on, if, you know, when it comes to getting ready for the mortgage application? I'm sure you see a lot of interesting expenses, or is it just the usual like fast food, coffee, things like that? Yeah,
and the banks don't really care that much about that stuff anymore. It's just like there was one guy and somehow he managed to get an approval. He was going to the pub like every single day and spending, I would say $100 every single day on just drinking alcohol.
Wow.
Somehow we got it approved because he had savings as well.
Yeah.
There was another family that went and did Uber Eats for lunch and for dinner every single day. And somehow we got them approved because they had good incomes.
Yeah.
Another dude was gambling quite a lot.
It's quite a common one, eh?
Yeah, but this dude was like gambling.
Yeah.
And we had to...
He was like at the casino every afternoon.
But we managed to somehow, and this is more my operations manager that managed to somehow get this across the line. And she was like, here's how much he's spent in a month. Here's how much he's won. The difference is X. And based on that number, it still works.
Whoa.
And we were like, that works. So yeah, so that one.
We're not sitting here saying that you should go and gamble though, but that's interesting. Yeah.
And I guess if you're watching or listening to this, just because you're gambling doesn't mean a yes or a no. There is the rest of the application, which is that particular person was saving money as well, wasn't using their credit card to gamble, and they had good income, a deposit, and they met the other criteria. If you have gambling and debt and no savings, then that's like 3 crosses. So it's kind of like it's never a yes or a no based on one thing. It's like multiple things.
It's very situation based, right? Like so many factors at play. When it comes to first home buyers and the first home, what do you think is the ideal first home setup?
Do you mean like the type of property that they're buying or like the structure of their mortgage?
Should we go both?
Both. I think it depends on the person because there's 2 different property types that they could buy. They can obviously buy a new build or an existing. New builds are way easier to maintain. You usually get a 10-year master build guarantee. They're very much like a set and forget kind of thing. And for some people, that's great. For others, they are like, I want something that I can renovate and do up and create capital faster. So that's more of an active way of doing things. So depending on their longer term goal, depends on what option they want. Like for me personally, I've always bought existing properties that have a bit of an add value that I can do, or there's just some land so that maybe I build on the back eventually kind of thing. So it depends on the person because of course, some people have no DIY skills, myself included, but I would just pay someone to do that stuff. But, like there's the idea of buying a 1960s bungalow that has lots of work to do, that is cold and needs insulation, is scary and they don't want that. Whereas the idea of having a new build with central heating and double glazing, they're like, sweet, this is perfect. So it depends on the person, but I think they need to focus on not just their first purchase, but if they're planning on buying 2 or 3 properties, how does that first purchase help them or hurt them into the second and
like
the third.
What are the goals for that person or couple or whoever longer term, I guess, too?
No point buying a 1-bedroom brand new apartment if you're got twins on the way.
Exactly.
And then mortgage structure, I think, is a very subjective thing. Again, personal circumstances, but also where we are in the interest rate cycle. Like right now, my advice to someone would be different to what it would be in a year's time. But I think splitting your mortgage is always a good idea because it de-risks. If you've got leftover money out of your deposit, which most first home buyers don't, then looking at offset accounts or revolving credits if the bank offers them. But the key take-home message would be get independent advice. People are always like, what do you think I should do on my mortgage? And I'm like, I have no idea, like username 16573. I don't know. You don't even have a profile picture. How would I give you advice? So not only can I not give them advice, but I can't I don't know anything about them. It's like kind of irresponsible to do that. Yeah. So individual advice is always important.
So you may have also just answered my last question to you, but what is the most important thing that first home buyers need to know right now?
I mean, there's probably not one important thing. I think like there are a lot of questions like that. What should I focus on? Or like, what is the most important thing? And it's because it's such a complicated process and everybody is so different. It's about figuring out what stage you're in and what you're missing. So like if you're wanting to buy, but you can't, why not? And then focus on that. Is it a deposit thing? Then obviously focus on getting savings or asking your grandma for a gift. If it's an income thing, well, can we put a flatmate in or can we increase your income somehow or do you just have to buy for less? So it's identifying what you're missing to get a mortgage, if that's the stage you're at, or what you're missing to buy a house. And usually if you can get a mortgage and it's what you're missing to buy a house, it's usually confidence to just take that little bit of step, that first step, I suppose, to actually making an offer, because people are like, it's scary, I don't know what to do. And I'm like, yes, here's how you do it. And don't worry, as long as you've got the correct clauses in, you can get out of this contract if you can't get finance, if the house is leaky, if your lawyer disagrees with stuff, or you just put a due diligence clause in, which means you can get out of it with changing your mind.
Yeah. Great. Hey, thanks so much for your time. If
No
anyone
problem.
wants to see some of your content, you want to do a cheeky plug of your socials?
I think they know the Mortgage Man.
Yes.
Just Google it, it'll come up. Yeah, thank you for having me.
Yeah, thanks so much. And thank you for listening to this episode of Fast Track. If you loved the episode, flick it onto a friend or a family member, and you can find our socials, fasttrack_pod. We'll catch you next time.